NVIDIA is only a couple points away from breaking out of this major pennant pattern on the daily. The expected move of this breakout would be all the way up to 135 to 140. NVIDIA hit my target of 135 last week after it had its breakout of this pennant pattern. So beautiful breakout move. And what's interesting is this isn't the only Mag 7 ticker that has a beautiful chart pattern on the daily chart. This is one that provided an amazing trade setup last week, but for this week, I'm actually looking at two. Looking at Google, first of all, and some of you might see it immediately, what I'm looking at right here. I'll get rid of these lines, get them out of the way. But if you know anything about just basic charting and basic chart patterns, there's a valid inverse head and shoulder pattern here on Google. And it's pretty rare you see an inverse head and shoulder pattern on a Mag 7 ticker, especially of this stature, where you could see the length here, for example, from the low of the left shoulder, that was August 5th all the way till now, you're looking at 47, 48 daily candles in length. So it's not a small one by any means. Pretty rare to see something like this. The first example of one that comes to mind is actually, I'll show you this very quickly, on NVIDIA. Now, by the way, to preface this, I don't expect this type of move from Google. Keep that in mind. But this is just to show you the principle of what the inverse head and shoulder can do once it breaks out. We have the left shoulder here on NVIDIA. We have the bottom, the head over here, and the right shoulder, and then a huge breakout. Now, obviously, like I said, I'm not expecting this type of like 200%, 300% breakout afterwards on Google, but we could still very well see a move like this out of the right shoulder. And I'll circle that to show you visually what I'm looking at, but we could still see something like this out of a right shoulder. This is pretty aggressive, doesn't have to be that aggressive on Google, but this still shows the power of that right shoulder forming, especially when it's in line or close proximity to that left shoulder and a nice rounding bottom like we had here on NVIDIA. So I'm looking for a move like that on Google here because the expected move just based on this inverse head and shoulder would be back to 177.5. So all the way up to here, that'd be a nice move, all things considered. I personally believe this can get back beyond 180 as long as the market stays bid. That's probably something for November by the time that it does break out. But still looking at this one, I like an entry this week as long as it can hold above this 159.90 level. The reason I have this as a level is, well, two things. One, there is a low that formed over here, a pretty nice low from last week. Additionally, part of that low is actually from the 200-day moving average, which I'll overlay right here. As you can see, this red line is the 200-day. This is exactly where the low formed. So very nice to see this was a supportive level immediately after it retested. So if we were to fall back under this 159.90 level, that would also mean we're back below the 200-day. So I want to make sure we stay above the 200-day. Typically, if you break below the 200-day moving average, that's very bearish. There's some times where you can reclaim it, like over here, we reclaimed it soon after. But you don't want to be below the 200-day for very long, or that's a bearish setup in the making. So I do want to make sure it stays above here, and it has held it nicely so far. Also, if it does fall under 159.91, very likely it goes to 156 next over here almost immediately because, well, one, we have the 200-day, be a breakdown like I just said, but then two, this would be in line with the left shoulder. In order for an inverse head and shoulder to form, you don't have to be exactly in line with the left shoulder. Some of them actually happen a little bit lower or a little bit higher, kind of like what we have from over here. So there's a range, kind of like in this range here, that you can have that right shoulder form. Anything over and it's not an inverse head and shoulder, anything below and that's a breakdown, that's a failed inverse head and shoulder, you want to get out of that. That's very bearish, since a characteristically bullish setup that breaks down is extra bearish as those longs liquidate. So you have a range over here of where that right shoulder can form. Personally, I like the current one from over here, like I said. So I'm looking to take a long position this week with my risk being under that 159.91 level. So I like this one from a technical perspective. Haven't seen as much on the flow side like we saw from Meta last week, which is what I'll get into here in a second. But just to show you from Friday of last week, these aren't anything crazy. None of these orders, these are pretty deep in the money, the 140 calls. So nothing too insane in terms of those. If we look at the entire week, it was pretty much the same thing as well. But I'll just show you here. We had a lot of call sell orders earlier on in the week on October 9th. So these are part of a hedge strategy. These are not necessarily directional in nature, just because these are pretty far in the money. Very rare you'd see a whale sell naked calls this deep in the money without holding the underlying. So they likely hold the underlying shares of this or have some other option position attached to it. So it's not the same as just selling naked calls. I want to make that clear. So really nothing too directional in nature from last week with a crazy amount of premium. So would like to see that come in as of this week once it starts to ideally break out from here after forming a very nice base around this right shoulder. But like I said, planning on adding this one this week. Risk is under 159.91. This one doesn't have complementing flow yet, but we'd like to see that for this week. Something that does have complementing flow and a nice technical pattern, like I just told you, is Meta. And what we saw near end of day on Friday is this crazy amount of premium, 3.2 million in premium, 1.4 million and 2.2 million, all at the money call orders for the November 15th expiration. So that's only a month away from now. Not really long, all things considered, especially for premium like this. Also, all of these were executed above the ask, so it shows some type of urgency there. So I like to see these types of orders. These types of orders, especially when they come back to back to back, typically prompt me to go over to the chart to see kind of what maybe they're looking at, or if I see a personal bullish setup that I like. I've spoke about this one previously because this one had an inverse head and shoulder before it broke out above this previous supply zone. If you remember that video, we did have a nice inverse head and shoulder both over here on the daily chart, a left shoulder, a head, and a right shoulder formed, as well as an inverse head and shoulder. It was a double one, by the way, as well as an inverse head and shoulder over here. We had the left shoulder, the head, and then the right shoulder here. So two inverse head and shoulders. And I'll just draw this to show you, but two inverse head and shoulders back to back, really bullish. Pretty rare to see that in a Mag 7, which is interesting because I've seen quite a bit of inverse head and shoulders on Mag 7s like within the past month or so, which is weird just because that's not common, but that's bullish for tech, and that's likely a reason why we've seen tech appreciate so nicely recently, especially for QQQ. Regardless, over here we had a nice breakout over the supply zone, and we're still looking at even more bullish flow. We saw a lot of bullish flow on the breakout, if you remember that week, and then now we're seeing even more complementing bullish flow. And it's likely that they're looking at something, if we go to the hourly chart here, like a breakout of this local downtrend. This local downtrend is right here. Also can consider this to be a flag variation. There's two ways you can draw it. One would be something like this. You can optimize this over here. This would be a pennant breakout, kind of similar to that NVDA setup just on the hourly. But then also we do have a valid flag setup if I get rid of this pennant. Two bullish patterns, all things considered, as long as you break out of the downtrend where both of the patterns have their resistance on. In this case here, we broke above the downtrend on Friday. Conveniently, let's look at the time here. This was around 12:30 to 1:30 Eastern. We started to see these come in around 3:12 Eastern. So a couple hours after this breakout near the close, they saw that this was likely going to close above the flag, which would be very bullish for continuation after. So they hopped on these 590 calls. They're expecting a nice appreciation from here. I would argue a good risk, at least for this position, especially if you were to mirror these types of call orders, that would be a breakdown back under the flag. So you're looking at about 585 to 584. A breakdown back under there, you do not want to be in that position. Otherwise, as long as it remains above, this can shoot back to around 598, 600 plus, where you have the next supply zone based on this hard rejection over here on the hourly chart. So I like how this looks, flag breakout as well as a pennant breakout. Also has complementing flow. As for this week, this is actually the best shorter term setup that I see in terms of the Mag 7. Google is going to take a couple weeks to get to that desired target. So a little bit longer, all things considered. Both are amazing setups. Both I like just as much as I liked NVIDIA last week, and we saw what happened there. So definitely watching for these setups this week, looking for a trigger on both of them, which should happen as soon as Monday, really. Maybe Tuesday or Wednesday at the latest for Google, but liked how NVIDIA played out from last week. I like how all the Mag 7 look so far. So looking forward to this week ahead. See you guys in the next video.